Weekend Market Recap, September 7th, 2025. The past week saw a confluence of high-impact financial news, setting a complex stage for the upcoming week. Oil and inflation outlook. A major theme was the significant increase in global oil supply. OPEC Plus and other major producers announced accelerated output increases and agreed to boost production in October, signaling a potential market surplus. This could lead to lower crude oil prices, which would be a welcome development for easing global inflationary pressures and reducing corporate input costs. This also positively influences the Federal Reserve's monetary policy outlook, potentially paving the way for rate cuts. Central bank policy and market expectations. U.S. markets are heavily anticipating a September rate cut from the Federal Reserve, with traders largely brushing off inflation risks. This expectation hinges critically on upcoming CPI inflation data, which will be the week's most watched economic release. Adding a layer of complexity, concerns about the accuracy and integrity of U.S. jobs data continue to surface, potentially introducing uncertainty into the Fed's decision-making process. Across the Atlantic, the European Central Bank, ECB, maintained its cautious stance, but its position is overshadowed by significant political instability in France, which poses a long-lasting risk to European stocks and bonds and could influence capital flows towards safer assets. Geopolitical and macro risks. French political upheaval remains a key concern, threatening broader Eurozone stability and potentially impacting U.S. companies with European exposure. Meanwhile, China's central bank extended its gold buying spree for a 10th consecutive month, a clear signal of diversification away from U.S. dollars. This sustained move could have long-term implications for the strength of the dollar and demand for U.S. treasuries, suggesting a structural shift in global reserve strategy. Strategic outlook. The upcoming week will be dominated by the release of U.S. CPI data, which will either solidify or challenge market expectations for a September Fed rate cut. Investors will also closely monitor crude oil price movements for inflation signals and continue to assess the evolving political landscape in France for its potential ripple effects across European and global markets.